Hi, this is Zach here with the Bulletin Board Heroes here at Vox Markets for Sunday, the 20th of March, the weekend edition. Starting off with Coro, which seems to have created a bit of a buzz in recent sessions. The breakout to, I suppose that's 1 year resistance, 1 year highs rather, above 0.4, above 0.4, looking at 0.5, maybe 0.52 to fill up that gap there from February last year. So that would be a decent target, while we remain above 0.38, 0.4. Only back below the rising 50-day line at 0.35, really delaying the upside scenario, which is backed by an extended uptrend line in the RSI window, something which usually helps such situations out in a meaningful way. On to Contango, where there's equal interest at the moment. Here you can see that we've got the shares attempting to break out again through 8 pence. I suppose we had that flurry up to 10 pence, but 8 pence, 8 to 9 pence, the natural resistance here. Broken that line of resistance from September, that's around 7.9, and above that, looking for 10 pence, maybe over the next couple of weeks, maybe over the next couple of months up to 14, which is the top of that 1 year rising trend channel. And at this stage, only really back below 7 pence, really delaying the upside scenario, 7 pence, an uptrend line from back in July. The time seems to have come for Cyba, which specializes in the governmental type of cybersecurity situation, which is clearly in vogue at the moment, given the Ukraine invasion. On the daily chart, we've got the 50-day moving average rather rising over the last month. The 50-day moving average rising near the lows tends to be a decent buy signal, and we've also got, I suppose, an uptrend line there in the RSI window, which there's been a second bounce off, which tends to help things along. Above 2 pence, certainly looking for up to 3 3/4 to 4 pence at the top of that broadening triangle from April last year. One of my favourite charting setups of late has been Conroy, just largely because I was pretty quick on it. The unfilled gap to the upside for March has been delivered by a break of that January resistance line. Bullish divergence as well. We actually also had a inside day breakout on Friday to end the week, so all good on the charting and technical fronts there. Above the 31 pence area, looking for as high as 50 pence, which is a line of resistance from this time last year on the daily chart. So looking ever better there for Conroy at the moment. One of the more difficult situation from Chill Brands. Here you can see how the shares have finally just managed to break that line of resistance from January. That was around 5 pence, so a little bit of a weekly close break on that. We've also got the shares bouncing last week off the falling RSI support line, which does provide some help. But here the idea is that the shares could fill the gap up and get up to former February support around 7 3/4, 8 pence, while there's no break back below 5 pence. So let's see how that setup goes. Cornerstone is next, and we've got a situation where we've broken that falling wedge the week before last, also bounced off an uptrend line in the RSI window. The view now is that above Friday's intraday support at 17.5, looking for the shares to fill the gap up to 33, 34 pence from back in January, and only really back below the late support of last week, really delaying that particular picture. Moving along to Genedrive, which happily had a flyer after the last mention here at the end of last week. Here we had the break of the 50-day moving average, also the break of recent resistance at 2021, and managed to hit that 200-day line. That's around 33 pence. Above 33 pence, we get an extra leg higher towards 50, which was the resistance for December. But I suppose one would be looking for some kind of retest of support in the mid-20s before a fresh move to the upside, given how far the shares have spiked over the last near term. Moving along to stock which might be able to do what Genedrive has done, that is Jules. Two horrible gaps to the downside at the end of last year and the beginning of this year, but slight glimmer now with the uptrend line in the RSI window, breaking that line of resistance from February around the 50 pence level, and above that looking for 75 to 80 pence, which was post-February resistance and the 50-day line on the daily chart. On to Kropz, which seems to be shaping up quite nicely as a recovery situation. Here you can see that we had a gap down on Wednesday, but gap higher on Friday to cancel it out. We also had a gap higher at the end of February, beginning of March. So lots of gaps here, and that does suggest that there's momentum building up. but that means we could hit the top of that May rising trend channel at 17 pence, maybe by the end of next month, especially while we hold above recent support at 7 pence. A request has come in sort of overnight today, Sunday, on Oxford Cannabinoid here. Also, the first glimmers of hope of a turnaround. Key reversal to the upside on Friday, breaking that line of resistance from February as well, around 1.4 pence. And the longer we stay above 1.4, maybe the best case scenario target here on the upside would be up towards the 50-day moving average at 2 pence. And maybe that could be seen by the end of next month. We've also got an uptrend line in the RSI window, which adds momentum to the current setup of the trend line break and the falling wedge breakout. Only really back below fresh lows, I suppose, only back below 1.25, really delaying the upside scenario for OCTP. On to Osirium, where we seem to have lots of new interest in the shares. We did manage to break that line of resistance from January. Recent swing low around 6.25, so above that, looking for 10 pence, even if the shares run out of steam after that. But there's a chance that we'll get the stock back to double figures over the near term on Osirium. Just a couple of stocks to go now. First is Simigon. Not much of a chart to look at, I suppose, here, but slight bullish divergence with the very low RSI that we had going into the year and higher RSI now, even though we've got a lower share price. We'd like to see the shares break 4 pence, which is that January resistance line, and also snap that dead cross sell signal, which the shares have so far done. If we can break 4, maybe up to 6 pence. Otherwise, I suppose 2.5 pence to the stop loss area, given the sudden move to the upside that we've had. Just finishing off once again with Xtract here, looking more positive with the rising 50-day line, support above the 50-day line by the end of the week. We broke that line of resistance from February as well, but above the 50-day moving average at 5.75, looking for 7, which is the main resistance line of note in the near past, or the recent past. That's from back at the beginning of last year, so 7 pence a key level to break. If we can break 7, then it could be back up towards the top of that rising March trend channel from last year at 10.5 pence over the next 1 to 2 months. So plenty to play for there at Xtract, and at this stage only really back below that support line there at 5.3 pence from the summer, really delaying the upside scenario. That's it from me today. More updates during the week.